Hello, folks. Brandon Chapman with you today. It's another Monday video for August 14th, 2023. Bears falter after their 2-week streak. And boy, you thought it was, it was unusual to see 2 consecutive down weeks. We didn't exactly really spill the beans on Friday. We kind of held and dug in tight, as we'll look at on the daily chart. But the first 2 consecutive down weeks that we've seen since when? May 1st. And so the question is, what's next for the market? We're going to come review 2 different possibilities, well, maybe 3 possibilities, but 2 main possibilities here, and what to watch for and potentially how to position yourself. So as we get granular on today, what you'll see is that, look, we began to, and I'll bring up the SPY since I've got my lines drawn there. But what you'll notice is we had this really big outside day on the 27th. I mean, that was a really kind of critical day for things changing or maybe breaking in the market. The problem is things didn't exactly break. We just went down. You'll notice we kind of hovered here. We finally broke through the low end of that range. That was on the 2nd. We retested it on the 4th. We began to break lower on the 8th. And so we kind of put this line in here. And what you'll notice is that, again, we've held on to it. We opened below it, closed above it. Today we opened below it, closed above it, establishing some significance around the 445 area or 4450 on the SPX. Point being is that we held on. And when we look at the downward move in the market, and I'm going to bring up the SPY in gold terms, we're just going to strip out the dollar's effect. So we kind of take a look at the highest here on the 27th, the S&P, and if we look at the yellow line here, I mean, the S&P is higher in gold terms. So here's the 27th. Here's where we are today, meaning the market has actually increased in value over the last couple of weeks. And how does that make sense? Well, going back to the SPY, remember, SPY is priced in dollars. What we've seen is, since the 27th, is that, look, I mean, the dollar has strengthened and it's pressured stock prices, but values have actually gone up slightly. And as we look at areas of where the performance has been the best, let's take the last 3 weeks. It's energy, it's communications, healthcare is positive. In the last 6 weeks, a very similar order here, with the exception of financials are in the mix. And we look at today's percentage change, what you'll notice is that technology and communications have led the way. Whilst, for the most part, technology has lagged over the last several weeks. So the question becomes, is this the reemergence of technology? Well, if we look at NVIDIA today, and if you look at the option activity, it was rather significant on NVIDIA. If you come down, you look at today's option statistics, about 1.5 times on the calls and the puts. Calls bought a little more than the puts. There was a lot of activity on this weekly expiration with, tens of thousands of contracts being traded higher than the open interest. But when you actually get granular, you start to look at today's trade, it wasn't like today was some big orders coming in, some big prints coming in on the buy side. It was more just a lot of day trading activity, a lot of churn, granted with a bullish bias, and helped to continue to propel the stock. And so what happened is you'll see that the activity really kind of began here around the 415-ish area, and it just continued to spill further and further out of the money. And so my guess, a lot of this volume is not going to spill over to tomorrow in terms of open interest. A lot of it's probably day trading, opening and closing, but it was capable of continuing to propel the price throughout the course of the trading day and even kind of spurred it on towards the close. But it's hard to really kind of nail down any particular strike price and say, hey, this is really where it's centered. But you'll see, every $10, $4.40, $4.50, $4.60, they're just kind of building these increments where they may start to trigger if it can just get above these levels. But again, is NVIDIA on great footing, right? So we look at the bigger picture. What we saw is that NVIDIA is more oversold. And so we're at a critical juncture here on NVIDIA at about 440 that if we fail here, right, if we see all the momentum carry today, if we begin to see it falter, we may see this rally reverse in the market. But this is kind of a telltale sign as the market's trying to recreate some of the magic from when? From weeks ago, right? Even in NVIDIA going into mid-July before we kind of peaked out here. And so watch it. I mean, it's an AMD as well. AMD was higher, nearly 4% today. You saw very similar option activity. Maybe we do have a chance of testing the high at 120 on AMD. But the point being is that if they can continue to spur on trade in these particular stocks, we may have something this week in technology. But is it broadly felt? Let's look at Apple, for example, today. It was up 0.94%. What about Microsoft? Microsoft was up 0.94%. Not much happening there. So while AMD and NVIDIA surged today, and you saw there was some bullish option activity in SOXL, nice engulfing formation. This is a triple leveraged ETF. But you can kind of see it out here, for example, 2350, 2250. Again, trying to engineer this. But technology, specifically semiconductors, is kind of a leader for the market generally and also a leader for technology. One of the things you might consider looking for is saying, okay, does Apple begin to follow suit? Well, what would that look like? Today, we did close above yesterday, which was the low, Friday, which was the low day. We did close above the high of the low day today. And so we look at the upside resistance here, maybe around 181 as well. We start to break out of this. We could look for a pretty nice run back to maybe 188. It may not necessarily be the odds on bet. The question is this just a flash in the pan today, right? Is the bears faltering to be able to contain and be able to keep NVIDIA locked in a box here? Is this going to spill over to a broader rally? And one of the things to key off on this is, of course, the dollar, right? We're making the move today. Tremendous option activity in NVIDIA, in AMD, driving the prices towards the session highs. But the question is, can they continue to do this? And I keep saying that, but it's a real question. We don't know what's necessarily going to happen. But you notice today, UUP, this is the dollar index ETF, making a slight upward move about 1/3%. This isn't exactly the wind at the back that technology needs to really continue to spur it on. TNX yields were slightly higher today. Again, rising yields is a problem for technology in the bigger picture, not necessarily in the short term. If they feel there's a little bit oversold, we could get a little pop higher in the very near term. And so yields are going to be a problem. The dollar is going to be a problem. And so the question is, as we're testing resistance here, are yields going to retrace? Are we going to see a pullback here? Are we going to see the dollar start to see a bit of selling going on? In particular, you can look at the euro/US dollar, again, kind of breaking out today to the downside. That would certainly belie some of the movement we're seeing in the S&P up 0.5%. That if this were to continue, you'd probably see that start to represent more bearishness on the open. In fact, this morning, it was XLU was up, or sorry, it was actually flat, but XLP was up and then faded. We gapped the open and we just closed lower as we shifted more of the interest towards the more cyclical parts of the market and early cycle leaders, like, for example, technology. And so right now, we're just kind of stuck in a box right now. Where is the market going to go? So in the case with tomorrow, we see continued weakness in the dollar, or see continued strength in the dollar. This may cause the strength in technology to begin to evaporate. This may help staples and utilities begin to reemerge, and especially if that also occurs in conjunction with some buy side in bonds and yields begin to fall. Now, it doesn't mean that you couldn't see some catch up and Apple and other stocks couldn't necessarily increase. But if we start to see, staples and utilities reemerge, if yields begin to fall on treasuries and the dollar begins to weaken, this does tell us is that, look, the rally is not necessarily all that secure. But if we continue to see leadership in technology, maybe there is enough here to make another run at the highs. I'll just bring it back XLK here to show it, but maybe you do have enough to make a run at recent highs, maybe 175. Maybe we are a bit oversold here, and there's enough juice in the tank to see the market get bid and drive this higher. And so again, key off the dollar, key off interest rates, or specifically the 10-year treasury yield, and then look at the sector performance to really make a judgment there. Now, as we look at technology, a couple of stocks that did see some bullish option activity was Ericsson. This was on the call side. You can see 88% at the ask, 24 times the average. And for Ericsson, this is a SEP and an October both. There's no weeklies out here, 11,000, and then October out here, 2,000, both greater than the open interest. So again, a lot of buy side call activity, bullish expectations based on this. The problem is there's just not a lot of depth to the options or liquidity. Yeah, we're starting to build some here, but the fact is the spreads are pretty wide. So Ericsson's one that it could be a stock trade, looking at possibly exiting below 490, but a target of 575. Vodafone, right? They're not exactly the same industry or sector, Vodafone's communications, Ericsson is technology. But, Vodafone was down today, but similarly, what we saw was long activity coming in. I believe this one was for January, 42,000 contracts, mostly bought 51%. But you'll notice a 13,000 contract, between the market. And so, but you see big prints in here for 8,000 and 3,000 contracts, similar, probably bought as well, 13,000. So significant buy side activity for January. So again, it's out there. And there is more depth out here. The spreads are tighter in Vodafone to be able to do some sort of option trade. But again, volatility is falling out here a little bit. But the idea is that this option is not super expensive in terms of just nominal terms. That if we get a move, you could see those options potentially rolling the money at $10 strike price by January. So again, that would require a much bigger move. If you're looking at the stock, again, support, backstop here about 9. Looking at probably, again, retest the highs at about 10.14 as a near-term swing trade as a stock opportunity. Option-wise, again, there's just not as much depth to these options, and spreads, could widen out, could be difficult to get out. But again, you can kind of go at your own risk there with those options. But I thought that was interesting. Two kind of, a phone plays, technology and communications, which again, were the two top performing sectors today. One that's kind of sleepy here is KRE. If you notice UBS made a nice big breakout on Friday, despite the downgrade, right? So this is kind of that banking space, more money center banking. But then you got regional banks like USB. Well, USB's languished a little bit, right? Hasn't performed as well. But if in the other scenario, instead of yields falling, yields begin to rise, and the 10-year starts to run towards the 13-week T-bill at 5.27%, all of a sudden you start to see, interest margins start to improve, and that's beneficial for regional banks that do a lot of lending. So while it didn't perform today, didn't participate, there was some bullish activity here. So you'd probably need to see some sort of breakout here to the upside. But it was a SEP, if you look at the options here, a September, buying the 49, where are you, 49, and selling the 54. So about 5,000 contracts here. So upside call spread going against this, it's skews not really all that, but it's pretty flat here. So you're not really being impaired a whole lot by buying a slightly lower vol and selling a slightly higher vol. So about the same. So not much of an edge in this, but again, something to consider. Again, you could construct an upside call spread. Looking at a retest of about $49 in the near term, realize that the spread's kind of targeting 54. That's way out there. You might consider something more grounded for 32 days out, a little bit lower strike price here. Again, you could construct something going to that 49 strike. But again, watch to see what happens here. This could really shift. Again, yields are going to be a big determiner for that. Now, if the dollar begins to weaken, what happens with stuff like gold, for example? Gold is something to watch. We're kind of back against support. It's been declining as the dollar's rising. And you could also look at silver as well. Silver's more cyclical. So again, back up against the wall at support, similar to what we saw in the end of June. So the question is, can we find some support here? So if the dollar begins to break down, gold begins to rise, silver begins to rise, how does that help or benefit gold and silver stocks? This could be an opportunity if the market does rally for these kinds of companies to rally with it. Now, Hecla broke support here, broke its prior support from February. It is in a weak position. I'm using this one as an example because there was some bullish option activity coming in today. Very near term on the August expiration, 8,800 contracts at the 4.5 strike price. So again, we have this kind of level. We start to break above the highs of the last couple of days. And this creates a circumstance where we could see a breakout. So watch it down here. I mean, you could look at even the possibility of an upside call spread. You'll see 472. You could buy a 450, sell a 550. Again, the vol is very favorable. That's 4 days out. Sorry, 32 days out. You could buy a 5 and sell a 6. You're buying the 45, selling the 53. That gives you 32 days out, $6. It's a ways up here, right? But it is a low risk, high reward trade that if we could run there, it's costing you probably 13 cents on a dollar-wide spread. So if we get a break, the dollar weakens, we retest prior levels of resistance, this could pay off relatively big. And your break even is only about 510, 515 in here. And so you don't have to go, it doesn't have to go up a lot to break even in Hecla, but you could do it, look for similar trades in SLV or GLD, just playing it more of a pure play on the dollar itself. And finally, we'll look at FXI. So again, a weaker dollar scenario. This could be bullish for emerging market stocks. I kind of went through this scenario on Friday, but the dollar strengthened today, not weakened. If the dollar does start to weaken, FXI could make a run back to 29, maybe 30 in the near term. And on FXI today, it was an 31.32, targeting 32 out here for the October expiration. So again, we're kind of shooting for the moon here just a little bit, 31.32. Again, you could go more grounded, go with a lower strike price. You could still go October or go a little bit shorter in September. Again, the vol structure is not unfavorable for doing an out-of-the-money call spread here. You could go even October here as well. But again, the notion is if the dollar weakens, we could see Chinese stocks, emerging market stocks. EM has a lot of Chinese stocks, EWZ. We could look at some of these. But again, the dollar strength today caused these stocks to go down. So you need to see a bit of a reversal. Finally, XLE. I think I wrote it in the summary as XLF, but it's XLE. XLE's made a nice run. But again, one way to speculate on the upside, if it's already made a nice run, out of the money call spreads. But this was a out of the money call that was being placed today on the OCT 93s. And so again, 93, and you'll see out here at 100 as well. The idea is targeting that upside here. Now, again, the vol structure, it's not unfavorable to construct a spread out here. It's a little less favorable to go closer to at the money, but they're stretching out here. 93, again, the upside here, 100, stretching, looking for upside kind of opportunity or to 100. Again, we may see it. Currently, oil is in backwardation with the falling curve here. It's steepened from a couple of weeks ago. And the oil situation is relatively dire. And if the dollar does decline and oil prices do surge here off of the lows, this should help energy here in the near term. So while it's overbought at the moment, sometimes stuff can increasingly get overbought. And those out-of-the-money call spreads are one way to play that. And we'll kind of wrap the video up there. We'll catch you back next Monday. And we have a great week. Thank you.